because we're not going to bury the lead on this. Let's get to Tom Lee, Fundstrat. He's pretty amazing, guy that we try to visit with as much as we can. He's on kind of a roll. He is managing partner and head of research at Fundstrat Global Advisors, also a CNBC contributor. And once again, you're doing exactly what I tell you not to do, Tom, and that is giving a price target and a time frame. Never do both. Never do one or the other, but you're doing it again. So 5,500 on the S&P by the end of June. It's hard not to talk about that immediately. Based on, Tom, lower inflation.
That's right. I think there's a fundamental case, Joe, which is inflation is coming in softer than expected. And I think the job market is it's cooling, but not weakening dramatically. And I think that's a good situation for equities. And I think that the sell-off in April actually hasn't really been fully recovered. And that's why we expected a rebound in May, but I think that carries over into June. And there's still $6 trillion of cash on the sidelines, and margin debt's still way below where it was in October 2021. So we know investors really aren't that long yet. So I think that comes together this month with a pretty surprisingly robust move higher.
It is a little bit longer than that crazy call you made. It was based on a week, Tom. I remember, and it worked out for you. You were right. So now at least you're doing it in terms of a month. In the past, when you have made these calls, it's been about inflation, hasn't it? And that's where it is again. What are you seeing in terms of components that make you confident that those were outliers that we saw a couple months ago, where it looked like it was inflation was coming back?
Yeah, the April inflation data, both CPI and PCE, kind of revealed that the two things that the Fed's been waiting to cool are starting to cool. One is shelter inflation. It's decelerating, even though it's still higher than the Fed would like. And then I think there's some evidence that auto insurance, which has been, rising over 22%, is beginning to sort of normalize. And I think sometime before the second half, auto insurance is no longer going to be contributing to inflation. So that's the dynamic we think that's at play in this upcoming May CPI report. That comes out May 12th.
The other lead I didn't want to bury, and this is another crazy call, Tom. 150,000 on Bitcoin by the end of the year. It's already June.
Yes. We're still constructive on Bitcoin. There's the tailwinds that are associated with the halving that just took place. We also know because of the Bitcoin ETF, and there have been tremendous inflows, but institutional sort of adoption and infrastructure being built around Bitcoin is only beginning. And that makes, crypto, especially Bitcoin, a bona fide asset class. And I think that sort of widening ownership is going to be propelling Bitcoin to 150,000. And again, maybe surprising or not surprising, Bitcoin still follows math. More than 87% of the move in Bitcoin still follows just the number of wallets and the activity per wallet, and both are moving higher.
Tom, I would think that a lot of your calls are based on the Fed cutting too. Bitcoin's not going to 150 if the Fed doesn't cut. So you must think that the Fed is going to be able to cut. Is that because of inflation? Is it because the economy slows? Fundamentally, what do you think has to happen for all these bullish things in both stocks and crypto to happen with the Fed?
I think it is important for the Fed to not have hikes on the table. So I think that's the most important for investors, is the Fed is no longer in a rate hiking cycle. But if the Fed makes even just one cut this year, I think it's really supportive of equities, because it really shows the Fed is trying to sort of nurture the business cycle, and it's a good environment for stocks. I don't think one cut or three cuts makes that much different for stocks, but again, you're exactly right. It all depends on inflation, really the edge coming off enough for the Fed to say we're comfortable cutting this year.
But not necessarily. We could have Goldilocks. We could have inflation come down and the economy continue to do okay.
Yeah, that's right. I mean, I think the companies' earnings have actually really spoken to how in a 5% pretty restrictive rate environment, earnings have been really robust. I know consumers, there are some trouble signs out there, but consumer leverage is still quite low. And of course, if the Fed does begin to cut, there's a lot of levers that will boost both consumer wealth and company demand. So I think there's still positive catalysts that are associated with a Fed cut eventually.
All right, Tom Lee, that not much more that needs to be said. We'll be able to, like, that's just way too specific, but we'll have you on and we'll check July. Maybe we'll have you on July 1st, see what's going on. We're not going to, we won't be mad if you're not.